Hey everyone, welcome back. In today's video, we're going to do a deep dive on Rocket Lab, going all the way up to 2030, looking at each part of their business in an effort to understand what kind of share price we could be looking at by the end of the decade. As you can imagine, this is going to be a very numbers-heavy episode, so if you're not in for it, totally understandable. Maybe just skip to the conclusion, but at the end of the day, it's important that you understand where these numbers are coming from and not just take the advice from a stranger on the internet. One thing you'll notice as we go through this model, it is intentionally built to be very modular. What I mean by that is virtually any variable that you might want to change, for example, the number of Electron launches, the number of Neutron recoveries, the space system's margins, those can all be adjusted on the fly. The reason that I built this model to be modular is so that it could be shared with others via Patreon. If you're interested in doing so, the link is down below. Now that the shameless self-promotion is out of the way, let's get to it. So essentially, the model is built up of three distinct parts. The first one is the income statement, balance sheet, and free cash flow. It's the stuff that you see in your general 10K or 10Q, your earnings reports that you get quarterly. The next section down below is your key performance and calculator section. This is essentially where all the formulas and all the math is being done to take the historic data and project something forward. We'll get to that in a moment. The final section down below, the ultimate purpose of this is to arrive at a share price. So the three sections are the earnings section, calculator section, share price section. Important to note as well is we have a multiplier column. Now essentially what's going on there is the second section, the key performance indicator and calculator section, is using formulas to arrive at a particular variable that will then feed up into the earnings section. This might not make sense up top, it's no big deal. All that I need you to get out of this part is that this is the section that you would make the adjustments to, is the calculator and key performance indicator section. So what we're going to do here is we're going to go through each part of the business. Rocket Lab breaks it up by launch and by space systems, but what we're going to do is take that one step further, and we're going to break launch into the Electron, then the Neutron. And as you can see on the right side here, we'll do Electron, Neutron, space systems, and then everything else. All right, so for the Electron revenue, what we're going to do is we're going to start at 2021 Q4. The reason that we're not going any earlier than that is because the revenue for the launches was not recognized at the point of launch prior to this quarter. So in a nutshell, a cleaner data set going forward. So you'll be able to see here how the different sections of the model are interacting. So what we do is we take the launch revenue and we are going to divide it by the number of launches in this particular quarter, being 2. And ultimately, we're going to land at the Electron revenue per launch in that particular quarter. As you can see, we've done that for each of the quarters that the data has been publicly available for, ultimately landing us at about 7.5 million average per launch currently. And to go forward, what I've done to multiply that is we've used the multiplier column at a rate of 0.62% increase per quarter. The reason that we're doing that is because that would reflect a 2.5% increase per year, as referenced during the Investor Day presentation of 2022. So a simple way to look at that is basically baking in inflation into the Electron price. All right, now for the Electron cost, we've done essentially the same thing that we did with the revenue. So we take the cost of goods sold per launch, and then again, we divide it by the number of launches in that particular quarter, ultimately landing us at the cost per launch in that particular quarter. We've done the same calculation with all the data that is available up until the most recent quarter being Q2 of 2023. And then these last 2 quarters in the year are just educated guesses based on the downward trajectory of the cost per electron. But to kind of peek ahead a little bit, there's a few more numbers that are interacting with the cost per launch. And we'll get to that in a moment. Essentially, what we're going to start integrating is just how beneficial the recovery efforts are going to be for the Electron, which I think are going to be a big part of the business starting in 2024. So you might have noticed that we've actually skipped a few lines here. And on the left side is mentioned that this is what was guided for, but we're not using it ultimately. It's kept here for a reference, and I'll explain briefly. It was during the Investor Day presentation of 2021. It was mentioned that as of Q1 2021, it costed Rocket Lab $5.5 million to build an Electron. Now, that hasn't quite held up, but there are a couple important tidbits to take away from this. One is the cost reduction that is expected in here. And this also gives us a hint as to what percentage of the Electron build is the bill of materials and launch-related expenses compared to the direct labor and overhead. Now, while nothing was explicitly stated as far as a percentage, I did the arduous task of pixel counting. So essentially what we were able to derive from that previous slide is that if an electron costs 5.5 million to make, it would roughly round us out at about this percentage for the bill of materials and launch expenses, compared to this as a percentage for the labor and overhead. Now, I realize that's not the most accurate way to calculate the cost of the machine, and I'm sure that some of that's changed by now, but the important part is that it is at least directionally accurate. So similar as before, we're going to scroll all the way to the right to get an idea of what exactly is interacting here. This 2.81%, it basically takes from Q1 of 2021, the reference of cost to build the Electron, and it smooths over the cost reductions over a period of time. So ultimately, what we're looking for is the guidance that was mentioned that would end at through 2027. If that didn't make sense, just pause the video here. There's a reference here from the Investor Day, and one here as well. So despite this not being kind of on par, it does at least give us an idea of what kind of allocation we can expect for the materials and the expenses compared to the labor and the overhead for the vehicle build. So now that that's out of the way, let's talk about the electron recovery. What we were able to find is the name of the particular vessel that Rocket Lab recovers their electrons with. The DPIC worker was able to tell me exactly how many people might be on board. I was able to find the capacity of fuel, the consumption of fuel, etc. Given my non-familiarity with this, what I did is I essentially took all of these numbers and I built a separate kind of sheet to give myself an understanding of just how expensive the recovery might be per electron recovery. So one thing that didn't quite make sense to me as I went through these numbers is I don't understand, well, one, if Rocket Lab does own their own marine recovery asset, or if they do continue to rent. And you'll see why I'm so unsure about that is because if they're willing to spend $12 million on that Sikorsky recovery helicopter, it seems kind of like a no-brainer, especially if recovery is going to be stepped up in this next year is what I expect. I mean, if you look at the past 10 launches, we're already sitting at like 40% recovery. That's going to go way up in my opinion. The reason that I say that is because previously they were expecting like 50-50 recoveries. Those quotes were all during that period where they were expecting to do the air recoveries. And now that we know that going forward, they're pretty much exclusively going to be marine recoveries, they can do these recoveries during periods where the weather's not so favorable. Like, for example, you can't have a helicopter in the sky if the winds are really bad, if it's too rainy, if the visibility is poor. Whereas with the marine asset, you can pretty much do it any time of the day. And as we go through these numbers, I think you'll get an understanding of like why it's such a no-brainer that Rocket Lab just buys a marine asset. Of what I was able to find, we can expect about $75,000 of rent per day. I bumped that up a little bit because this quote is from like maybe a year or two ago. It was a Peter Beck interview. So I'm assuming that is about $75,000 per day to rent. You're going to need to rent it for about 2 days. So already you're sitting at about $150,000. So for the labor, I put the head count at 10. And while this particular vessel can hold up to 23 people, looking through some of the old recovery photos, it seems like there's definitely not 23 people. Like I'd be surprised if there was 10. But I think 10 is a conservative number as of what to expect. So that's what we're going to go with. I'm assuming that some of these people on board are going to be like, well paid, right? So I'm assuming a 6-figure salary. And then ultimately we can arrive at the net salary on board, divide that by how much per day. And again, because we're doing the 2-day thing, we're going to arrive at about $5.5 thousand in wages. So as far as how much people are being paid on these ships, I understand this is not going to be accurate, but at least it's probably directionally accurate. Even if we like 4x'd it, still not going to make a huge dent on the overall impact, especially when you're paying $75,000 just to rent it for the day. So now that we have the rent and the labor for the recovery, the last thing we got to do is factor in the fuel cost. The capacity doesn't matter so much because they're only going out for a couple days at a time. We don't use all the fuel, but we do know that it consumes 168 liters per hour at 10 knots. Multiply that to find the kilometers per hour. That's 18.52 kilometers per hour. The 400 is the distance out to where the Electron is recovered. This number may be conservative. I think this is one of the farther launches, but I was only able to find the information on how far out the Electron recovery happened at sea. Ultimately, it's probably a pretty conservative number. If anything, it's going to be closer inland. So you're going to take that 400 kilometers, divide that by the kilometers per hour. We're ultimately going to land at 43.20 hours. Multiply that again by the amount of fuel that's going to be consumed during that time, and we're going to land just over 7,000 liters of fuel burned. Now, the next little bit, this is another one of those gray zones that I don't know a ton about. So what I did is I asked actually ChatGPT to help me out with this. So what we did is we found the high over the past 5 years, as well as the current diesel price. I also asked ChatGPT to explain to me a little bit about marine diesel compared to regular diesel, and essentially what the outcome is there's additives and stabilizers that are added to regular diesel in order to make it work better with marine assets. So you can expect a 10 to 30% increase in that price to convert the regular diesel to being marine ready. So ultimately what we did here is we took the approximate 1.2 liters right now, gave that a bit of a premium, like roughly a 25% premium, and ultimately we're landing at $1.50 per liter for the fuel now, which ultimately arrives us at about $10,000, $11,000 per fuel. So that all being said, as far as the overall recovery tag, one thing that I'm not clear about is generally when Rocket Lab announces that, hey, we got a launch window, usually it's a few days, right? And I don't understand how the relationship might work between the rental company and Rocket Lab, because if they have to rent it for the days that they just might use it, we'll just adjust it here. And again, for those who are manipulating the variables at home, all of these dark gray cells can be adjusted. So for example, if we go with 5 days, for example, instead of just the 2 days, that's a huge jump. And from what I can find online is a DP1 sea worker or a similar vessel, you're looking at about anywhere from $100,000, and of course there's going to be the whole different upgrades and stuff to make it ready to pick a rocket out of the water. It's going to be not a base model, we'll say, but if that's the cost per recovery is $400,000. Even if it is the bare minimum, they're only being charged for the day that they use it. That's still close to $200,000. And again, this is one of those things, tell me if I'm wrong, but if these vessels cost, even up to $1 million, right? Depending on the build, on the make, the model, the enhancements, the adjustments, etc. Even if you factor in all of the maintenance and whatnot, if this is going to be a major part of the business, Rocket Lab needs to be buying their own. That's my 2 cents. So now that we have a rough estimate of just how much each recovery might cost them, assuming it's a rental, we're going to bake that into the cost of recovery / usability. What I mean by that is we're going to take that same $5.5 million to build the Electron. We're going to use the same percentages from that $5.5 million to account for the bill of materials and the launch expenses, plus the labor and overhead. And then next up, we're going to identify the percentage of the Electron that is recovered with each recovery. So we know from a recent interview with Colin Canfield that approximately 60% of the Electron's cost is recovered. So that's 60% of the 5.5 million that arrives us at 3.3 million. The next assumption that we're going to make is that in order to get things back, when you bring the Electron back to the shore, you're going to need to take some parts off, swap some parts out, maybe add some new parts that did get some water damage, etc. But ultimately, what we're going to assume is that it's going to cost about 25% or a quarter of the original cost to get the recovered Electron's first stage ready to go again. We did that same 25% with both the bill of materials and launch, as well as the labor and overhead. The other thing that we're going to factor in as well is the cost to recover, which is simply being fed from this number here, arriving us at this number. So this is the ultimate cost to recover and rebuild and get the first stage ready to go again. The final number that we need then is the cost to build the second stage. So if the first stage is 60% of the rocket, second stage and the rest is going to be about 40%. So we just take that 40% of the 5.5 million cost to build in the first place. And finally, we arrive at the number of what exactly it might cost to refly a recovered Electron. So now that we know the general structure of how much it is to recover, then rebuild the first stage, and then how much it is to just rebuild the second stage, and then the total cost, what we can do is we can kind of integrate those numbers with the overall model. So essentially what I've arrived at here is that if you were to take the 5.5 million and assume that that is the current cost to build, because that's roughly where we're at, and then we multiply that by 32.5%, that's going to arrive us at 1.8 million, roughly. What we're going to do is just quickly cross-reference this 1.8 million with this one here. So that's the first stage total is essentially what we're looking at. Now, the reason that I arrived at that 32.5% is that's just what I was playing with over in the multiplier section. So this is a good example of one of those areas where if you think that my numbers are off, but you want to manipulate the spreadsheet in your own way, like say, for example, you think that 32.5% is not bullish enough. Say that, they can cut costs and make it a lot more beneficial to the company. We'll bump that up to 40%, for example, right? You're going to see that the value of recovery is going to go up. So similarly in this multiplier column, the next cell down, this is your recovery mix. So what I mean by that is in the past, Rocket Lab has given guidance that they want to recover about 50% of their electrons. But this was mentioned during Investor Day 2022. Now during this time, this was September of last year. So this is just prior to the second helicopter attempt, which without them explicitly saying it, I think there was a bit of I think the pilots were a little uncomfortable. And I think that management at Rocket Lab kind of took a step back with the realization hey, there's SpaceX sending humans to the ISS without any casualties. It would be pretty silly if Rocket Lab was the ones who saw the casualty because the rocket takes the helicopter down. I mean, that would just be it'd be such a bad look, right? And I think with that, they just decided it's not worth the risk. Let's just pivot back to the marine recoveries only. As a result, I think this number is going to be a lot higher than the 50%. And this is another good example. Say you think it's going to go up to 80%, change that to 80. You think it'd be 90, do the same, right? For the time being though, let's just leave this at 50% and leave the value of the recovery at 32.5. So the next part of the business that we're going to look through is the Neutron. And you might have noticed that up above, there is only this one section for launch. This does include the formulas for both the Electron and the Neutron. It's just an important side note there. So with this section for the Neutron, it's going to be very straightforward. It's going to simply take the number of launches expected in the quarter and multiply it by the revenue for each. And then we're also assuming that same inflation multiplier that we did for the Electron revenue. The ramp cadence that I also gave to the Neutron is assuming that their first customer will be in Q1 of 2026. And you'll kind of notice that there's just a gradual ramp up until 3 launches per quarter, which is basically, that's Virginia maxed out. Now, obviously, they're going to add more pads and whatnot, but that's just, we're just looking at their current infrastructure and kind of looking at what the end of the decade might look like. Now, for the cost of the Neutron, this is a bit of an assumption. I'm assuming that it's going to cost about $40 million to make. And then as far as the allocation between the bill of materials and launch, I'm assuming that that's actually going to be the same as the Electron. Again, not going to be how it ends up being, but it will at least be directionally accurate. Finally, we have those last 2 metrics similar to the Electron. It's the value of expected recovery as well as the recovery mix. In the interest of time, we're just going to assume that 40% of the value of the first stage is recovered and that 80% of the launches are recovered over time, of course. So next up, we have the space system side of the business. This, to me, is a big black box. And the reason for that is Rocket Lab doesn't tell you exactly how many solar panels they're selling or how many star trackers or how many reaction wheels. And I mean, even included in the space systems revenue is also like the satellite monitoring. So there's a big umbrella and a lot of it is kind of unknown. As far as understanding the growth of space systems, the closest that I can identify of how to understand it is looking at the past results that don't include any sort of an acquisition during that particular quarter and using that growth metric as an average to delineate what kind of future growth we can expect. All of the quarters that haven't seen any sort of an acquisition in recent history combined them together and found an average. Now, I know that's kind of crass and unorthodox, if you will, but the reason that it checks out is because in one of my past videos, I talked about the hidden guidance from Q2 of 2023, where they mention the current backlog that they have, as well as what they're expecting to recognize over the next 12 months. So finding that number and then subtracting the expected launch revenue over that same period, we were able to roughly identify the space systems revenue over that same 12-month period. And with that, essentially what we were able to find is the space systems revenue expectations between this particular period here. And what it arrived at is about $170 million for the upcoming 12 months for the space systems revenue. And as you can see here, the numbers that I have using that same 6.1%, it arrives at about 197 million. So it's about a 15% premium, which is kind of expected. I'm sure that Rocket Lab's certainly going to get a little more business between now and a year from now. So what we're doing is to extrapolate that forward. It's just assuming a continuum of 6.1% quarterly growth going forward. Again, if this is too conservative for you, feel free to bump that number up, as with any number. So next up for space systems is the cost, and I guess hand in hand with that is the margin. As you can see, is back before the ASI and PSC and then the Solero acquisitions that all took place in basically half a year, Rocket Lab had some crazy good margins for space systems. It was like 65%, 70%. And you notice when ASI and PSC were acquired, it dropped down to roughly 50, we'll call that. But then it was really hammered down with the Solero acquisition. So with that, crossed with what management has explicitly said, is that Solero is kind of a drag on the margins for space systems revenue. I think that as soon as Solero hits that 30%, I think it's more than safe to assume that everything else is going to be 35, or probably quite a bit higher. But I think in the sake of conservation, we're just going to go with the 35% for this base case that we're building. All right, now for the operating expenses. Essentially what that is the research and development, as well as sales, general, and administrative. These were also guided during the 2022 Investor Day, both Investor Days actually I'm seeing. And they both landed at about 15 to 18%. So essentially what this multiplier does is it's dragging down this as a percentage over time to meet that 18%. Again, we go on the high side for the sake of conservation, that 18% for research and development as a percent of revenue. We're going to do the same thing for sales, general, and administrative. This was quoted from both Investor Days as 10 to 12%. So we use this multiplier to bring that as a percentage of revenue down to 12% over time. Now to fill out the rest of the income statement and the balance sheet and the free cash flow statement, I'm sure you guys are kind of getting the idea by now. Essentially what we're doing is we're working with formulas from below that are feeding upwards and kind of filling out that information above. So we'll use the tax provision as an example. So essentially this number here is interacting with all of these in this same row here, but it's feeding from down below where this number is being arrived at through the information that we do know, interest expense as a percent of total assets. And we've left out the kind of outliers because these are obviously going to really affect the formula in one direction or the other. So we'll kind of find a happy medium and go with that. The number that we ultimately land on for this particular row is 1.34. And again, that feeds up top and that fills out the rest of these based on the closest parameter that the one we're looking at is working for, so to speak. One thing you may notice for some of the future values is a lot of these are just left as orange cells with a zero. The reason for that is a lot of these are actually going to be beneficial if we fill them out, but they are a little bit of an unknown. So filling them out, making those assumptions is bullish, if anything. I always like to add layers of conservation onto these models just so that you're pleasantly surprised on the upside, if anything. And then past that, any of the cells that are not orange, those are basically working with the formula. And if you're unclear about what exactly the formula is, just simply look to the multiplier section, and that's almost certainly the number that the overall row is interacting with. So again, if it's not bearish enough or it's not bullish enough, that's how you're going to manipulate it, is through the key performance indicator and calculator section. And that's going to help you manipulate the overall model and in the end, the share price that you can expect for the end of 2030. All right, so now that that's out of the way, let's finally get to the fun stuff. Let's get to the share price. Essentially what I'm going to do is I'm going to intentionally not show the share price quite yet. We're just going to show all the past data. This section here, this is where the share price is going to be, market cap, and then a few ratios, price to revenue, price to gross profit, price to earnings, etc. And then underneath, this is where the actual formulas are going to be populating. Essentially here, there are three different formulas: the PEG share price, the margin of safety price, the payback price. So the PEG share price is based off earnings. The margin of safety price, that's based on more like the overall growth of the company. So that factors in like revenue, operating cash flow, net income, and I think book value as well. And then the payback price, that's more based on your free cash flow. So as you can imagine, until the point where Rocket Lab actually is earning like profitable and free cash flow profitable, these formulas won't actually work as far as finding a share price. It's actually going to show you a negative share price. And obviously that's not what we're looking after. So up until the point where we can expect some profitability, I've literally left the share price as just what it is currently. So it's literally just, you can see it's referencing the cell before it, and this is the current one that we're in. So up until the point that we are profitable, it's just left as what the current share price is. Now moving that all the way forward, you can see, yeah, like here, for example, it's showing us like the share price should be negative. Obviously that's nonsense because, well, it's just based off the negative earnings or free cash flow, which you can't do anything with until it's there to do something with. So going all the way out to 2030 though, this is the share price that is arrived at. And keep in mind, this is like the base case, about 1205. Now that's based off of these multipliers. So this would be earnings roughly at 30%. Again, that's feeding from the key performance indicator and calculator section. And then the payback price, which is feeding from this cell right here. So going from 440 now up until 1205, that's about 170% increase. So you're going to do well with that, assuming that these numbers are correct, which of course the market will make sure that they're not correct. The market can be very irrational to the upside, very irrational to the downside. None of this is financial advice. This is all just formulas working together, right? So don't quote me on this, but that's kind of the number that we're arriving at for the base case. All right, so now that we've looked after the base case, what we want to do now is change a few of the variables just to give you an idea of just how modular this model is. So in this scenario, let's bump the Neutron up. Let's say that they've built out a second pad in Virginia. What else can we change? We can say that the recovery rates are way up. So let's say that they've been able to save up to 40% for the Electron. Say that the recovery mix is up to 90%. How about for the Neutron? For the Neutron, let's go like 55% recovery value. And how about 90% recovery mix for that? Let's see, we got space systems margins as well. Let's bump those way up. So what we'll do, you notice too, these here are all static. They're locked in at 35. So they're no longer, these ones that are 35, I mean, these are just interacting with the cell prior to them rather than using the multiplier like most of the cells would be otherwise. The way we can work around that, and you'll notice there's a little red tick. This notes that the cell before has a different formula than the cell after. So what we're going to do is just bring this formula out into the middle of 2025 so that it is still reacting with the multiplier cell to the far right. What we're going to do is essentially bring that up to 48% for space systems margins. We'll also adjust the PEG ratio because, as I said earlier, the market can often be irrational, sometimes against you and sometimes in your favor. So let's pretend for now that the particular market swings a little bit in your favor. So the PEG ratio is 1.25. And the last thing that we're going to adjust is the earnings growth rate and the free cash flow growth rate. Because of all the changes that we just made, you can see that this 30% that we have it locked in at, this is actually going to be probably quite a bit higher. I mean, we're not going to say that we're growing at 1,000%, for example, or even a few 100%. But I think it is safe to say that if the numbers are growing the way that they're modeled here, it's safe to say that the earnings is going to be at least 40, maybe 45%. So we'll do that. Similar relationship with the free cash flow. Let's say that this is maybe 40%. And then finally, we'll look at the manual adjustment that needs to be made for the overall growth of the company, and we'll bump that up, say the everything, like the whole unit that is Rocket Lab is growing at like 25%. So you can see there's a huge jump between the $12 for the base case and then this $55 for like the hyper bulk case. Hopefully this gives a clear outline of just how malleable this this spreadsheet is. Like I said, I built it from the ground up with the intention of not just myself using it. So hopefully you guys get a lot of value out of this video and in turn out of the spreadsheet. And yeah, just thank you for spending the time with me today. I know it's a bit of a long one, very in depth, there's a lot to go through. So yeah, thank you for your time, and I'll see you in the next one. Thanks. Cheers.